Welcome back. Today, Palantir filed its 10K, which is the SEC filing that all public companies are required to file on an annual basis. And nobody really reads these, even though they're super important. Professional investors read them, but you'll never find a retail investor reading these. In this video, I'm telling you 5 of the most important hidden details that I have found using a FactSet Blackline report, which is a professional tool that shows the changes year to year, right? Because if you read it last year, you don't want to read the entire thing again. There's so much boring accounting details, boring legal details, but in this video, I'm summarizing for you not just the 294 changes that were made from last year's report to this year's report, but the 5 important details that Palantir has talked about that are really hidden, talking about Palantir's new business developments, as well as a buyback and inclusion in the S&P 500 at the end. So here is how the Blackline report works. Anything in gray marks small changes, underlines in green means this was an addition compared to last year's filing, and when something is struck through in red, that means it was completely removed. So here is the difference that we have. With the new development in 2023, of course, was the introduction of AIP boot camps to expedite the development of that platform using actual customer data within days instead of however long it usually takes, and broadening customer engagement and enhancing product development through practical hands-on trainings. And what's interesting here is this is under the expansion of access to platforms. So that's a very product-focused core competency coming from Palantir. What they've removed from this section is making a number of investments in companies whose businesses rely on the ability of their organizations to blah, 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 use Palantir. So this was the SPACs, right? They were investing in SPACs because they were saying our products are so good that if we invest in these companies, the market value of their equity is going to increase and our investments are going to do well. And it just turned out to be a total disaster, not because it was a bad idea. And I think I was on a record early on saying this potentially could have been a good idea, so I'll accept some fault. But it turned out that making investments in companies is not a direct link between the management and analysis of data effectively at scale, which is what they say, right? There's so many other factors because evaluation is the biggest one and other things, and it takes time and all of that. So what I really like here, and you see it in this picture, is Palantir is focusing on their product. They're not focusing on companies. They have no idea how they're going to succeed or not. They're focusing on what they can control, which, as you'll see from the stock price, comparing 2022's performance to 2023's performance, you see an incredible difference. And let's hope that continues. Now on to channel sales and cloud partnerships. They added here some language saying they've continued to explore the establishment of channel sales relationships and similar alliances with public and private organizations, opening a path for us to partner with varying providers, including smaller technology providers. Some example of an ongoing exploration and establishment of new partnerships, even with smaller providers, right, which is definitely been a weakness of Palantir in the past, and widening its network and creating new avenues for it to dominate the market. So just a great small detail that the sales strategy for Palantir is really continuing to expand and going further than ever before. Now on to joint ventures, which Palantir talks about as JVs, as an abbreviation. So what did they include here? They say in December 2023, we, through Palantir Technologies, Japan KK, entered into a strategic global partnership with Fujitsu Limited, through which the parties will incorporate the capabilities of Foundry and AIP as a key element in the data infrastructure of this entity, which is a portfolio of global solutions that address business challenges and solve societal issues. So this is very interesting, right? Because the joint venture is very much even more hands-on than Palantir working with a normal customer, because it's a new business partnership and it's using AIP in a portfolio of Fujitsu's solutions. So I think this is super exciting and definitely went over my head and definitely more of an unrealized detail by investors. On to the stock purchase program, the buyback as we like to call it. They've of course had to add this into their 10K SEC filing to talk about it. So what are the details here that are important? So in August 2023, they authorized a $1 billion stock purchase program to potentially enhance shareholder value, repurchasing through open market buys or privately negotiated transactions. But what they clarify here is the company cautions that there are no assurances that the stock repurchase program will lead to increased shareholder value, and it notes potential risks, including market volatility and the possibility that the program could affect stock price and market liquidity in unintended ways. Now, hopefully those unintended ways are to the positive, right? And you can stop and read this whole blurb here if you want to. But what they're saying, right, is if they purchase stock at the wrong share price values, they could be incinerating equity of the company. Because if you're buying stock at $100, for instance, and the stock's only worth $10 in a random example, you're destroying shareholder value because the stock's not worth $100. Now, that would never happen, but there is strong indications that companies buy stock at the wrong times because they accrue a lot of cash and cash equivalents when times are going well, and that's when they buy back stock, when times are going well. And so they destroy shareholder value because when times are going well, most likely your stock isn't undervalued and you do better off investing back into the business, not buying stock. But what Palantir has done here is times are going well for them, right? I expect them to go even better. So maybe there's potential for them to buy the stock at 25, it goes to 30, right? In a more short-term period of time. But rather what they're doing instead is they're saying, we're trying not to destroy any shareholder value. This is how I'm reading it. This is just my interpretation. But we might destroy shareholder value if we lunged into buying stock at a level where it's not screaming undervalued. And so I believe in August, when they instituted this program, they were instituting it because they knew if the stock declined significantly for whatever reason, they could increase shareholder value by buying on the open market. That's just my read. And seeing this language, of course, this is not indicative into the reasoning behind it. But I think Palantir is less likely to purchase shares above $25 than they are below $15. That is my understanding of the situation. And finally, what we have here is a mention of the S&P 500 index, which Palantir is very much expected to join in March. Last year, I said it wouldn't happen. I was right. The S&P 500 committee wanted to see some more data, and I do believe Palantir will be joining in March. So the language they've written here basically replaces where they're saying that they could not be included due to how their class structure works for their stock. The S&P 500 now allows companies like Palantir to be included regardless of their dual or multi-class capital structures. So you see the S&P 500 eliminating them from the contention of joining the index is now struck through in red. And it says Palantir might get discriminated against based on that, but they're no longer calling out the S&P 500 as one of those that would delineate Palantir's class structure. Very much opening them up and opening investors up to the future of them being included in it, which is largely as expected. But now it's in writing, and now it's in their SEC filings. Investors can be like, why did you make that change? And Palantir has to stand behind it. So hopefully this video was helpful. A handful of examples of hidden language that just got changed just today that everyone's going to miss because reading these filings without the black line report, without the highlighted details that have changed is just really grueling, and it's hundreds of pages and you're not going to do that on your own. So hopefully this was helpful. Leave a like if you want to see more videos like this. Until next time.